What's going on, YouTube? It is your boy Go to Trades, and I'm back with another weekly analysis of the stock market ahead. So you and I are both prepared for what's to come in the stock market, so we're not left in the weeds and destroyed with our accounts. Listen, guys, whoa, whoa, you got Nvidia down 19%. You got, oh my God, what's going on? I know this week was a crazy week. You had the tariff talk, you had DeepSeek, so much going on. I know a lot of people were just confused, and guys, listen, I was confused too. I'm not gonna lie, but listen, the reason why we do these weekly analysis is that it doesn't matter what news comes out, what happens, we are still ready and willing to trade, and we're still making money. So that's what we are here to do. Now, before I get into it, I just want to say, listen, I did this whole video and it was super long because the weekly chart and the monthly chart, they both closed on Friday, so there was way more information for me to jam pack into this video. And I basically did the video already, I recorded it and everything, but I realized that the mic was not working. Oh my goodness, guys, I am pissed off. So if I sound like, oh my God, like I don't want to do this, guys, it's because I don't want to do this. But we're gonna hey, the show must go on. We're still gonna do these analysis videos and all that good stuff. So with that being said, I need you guys to like, share, and subscribe. Really like, share, and subscribe, because this is guys, I'm going through a lot right now. A lot. Anyways, let's go over the stock market. Guys, I know this looks bad. It does, kinda. But we do have some pockets of green, and we have to take note of it. Even though we see the technology sector looking kind of crazy, AVGO, Nvidia, Microsoft, oh my, Oracle, guys, I know, I get it. Last week, we saw a lot of stress, mainly in the energy sector. We've seen it in producer manufacturing. We've seen it in transportation right here. We've seen it in consumer durables. Guys, yes, even technology. But with financials still looking relatively green, I wouldn't be so bearish yet. You have financials looking relatively green. You have commercial, retail trade, healthcare technology, consumer non-durables, utilities. You still look pretty decent. Consumer services, you still look pretty decent. Commercial services, Visa, MasterCard, you still look decent. There's been a rotation out of energy, and obviously energy and producer manufacturing, we've been pretty bullish in these names. Now we're just getting a little pullback. I still think that these names still have some room to run, but obviously, we're getting a little pullback, and it's just straight rotation. We're just seeing a lot of rotation. I'm not too bearish into the markets yet. Obviously, we could still see drawdowns, but I'm not that bearish as of yet. Now, when we get into our earnings whisper, we do have a lot of information, a lot of potential things happening, potential movers, big movers. We have Palantir. A lot of people will be watching Palantir. Not really a fan of that chart, but it looks decent. You have PayPal, you have Spotify. Spotify is my personal favorite. I love Spotify, PayPal. AMD is gonna be one to watch, especially for the chip space. You have Google, Snap, Chipotle. You do have Uber, my favorite name of the whole earnings chart here. I like Uber. You got Disney, Qualcomm, and ARM, another chip name. You do have Boston Scientific. I do think that they're working on some robotic stuff, so I kind of want to tune into what they got to say. Eli Lilly, pretty interesting. For the healthcare names, I'm bullish on healthcare, and we'll go over it more into the analysis. Amazon, and we do have Pinterest. So what do I think? I do think that a bulk of these names are going to affect the broad market. You have the Dow Jones that this is going to affect. You also have the S&P and the NASDAQ. And I really want to see what chips do. I do think that chips are oversold and ready for a bounce, personally. And again, I'll go over that sentiment as we get deeper in the video. And I also have some really nice trade ideas that I think that you guys won't want to miss. So please make sure you guys stay up to date and watch the whole video. Now, decent movers. I do think everything here are going to be some decent movers. What I would play, the only thing I'd play here, I'd probably play Uber. I like Uber. I think Google's going to get a bounce too. I like a lot of these names for the upside. Next, we have our economic watch, our reports for the week. Now, I'm not really looking at the reports to really move the market too much this week, especially for the first half. I'm really going to be watching for the initial jobless claims and the economic reports and hourly wages. So our Thursday and Friday session are going to be the ones to really watch. So if I were you guys, I'd just be watching those sessions to see what happens. But for the most part, I'm not really into the news-driven events for at least the first half of the week. Next, let's go over our weekly performance on our trading. Now, for the weekly performance, obviously our monthly performance is pretty I will go over the monthly performance in my monthly analysis video. If you guys don't know, I do have a road to $10,000, and that's going to be a series that I have on the channel, and I am making that video right now. So right after I post this video, that video is going to come up right after. So check that one out after you watch this video. So I'll be going over my monthly performance, but right now we're just going to focus on the weekly. So the weekly performance was pretty decent. I started out pretty bad at -400, and that's because of our major gap down. So we had the DeepSeek news that kind of messed us up. We gapped down. I was in Coinbase. Let's go over the trade. I was in Coinbase, and if I'm being completely honest, I thought it was a decent trade. So if I were to look at it on a daily right here, I got in on this pin bar. Even though it's a pin bar, obviously, yeah, it could have continued went lower, but we've been making a series. We've been making a series of higher lows. We've been actually trying to curl. So if I were to mark, this looks like we were curling. So because we're curling, I'm like, all right, I'm going to play the momentum to the upside. So we end up gapping down and then buying right back up. But because I lost a lot of money last week, I didn't want to bet on the idea of us keep like grinding higher, just making a higher low. Instead, I was like, okay, I'm just going to sell here, because what if we continue going lower? So that's what I was watching. I end up cutting for a loss here. It kept going a little bit higher. We end up testing our close, but I'm okay. I wasn't going to bank on that. So I ended up taking a $700, $800 loss on this, but it wasn't that bad. Why wasn't it not that bad? Because this week I ended up making, not this week, on that day, I ended up making a 100%, 127% play. I'm sorry, I can't talk. Remember, this is the second time I made this video. I'm so sorry. I ended up closing up green on Procter & Gamble. We ended up calling this out last week, I believe. Well, I called out the XOP and it being a bullish setup for the short term. So I ended up getting Procter & Gamble. That's one of their highest weighted stocks. And it went 127%. I like that one. I ended up getting Google and Adobe for a bounce play. I called all these out inside of my Discord. So if you guys want to be a part, obviously the link is down below in the description. Okay, super duper free. It's free 99. Okay, everybody loves free, including me. So yeah, make sure you check that out down below in the description. So we also had some pretty good movers as well. We had Caterpillar, a pretty good move, 23%, 28%. We had right here QQQ calls. We end up buying the dip, went up 52%. Amazing. We had Cat again, $100. On this day, on our Thursday session, we made $300. We had Adobe. This is when we end up closing out. We had the QQQ call, 18%, pretty decent move. Look, it was a decent move. We end up green on the week. We played the downside a little bit on QQQ on the Friday session. Guys, it was a decent week. We end up making $400 profit for the week, but if you were to really look at like my whole month performance, and I'm not really going to talk too much about the whole month because that has a video, we did pretty well on the month, except for week 4. Week 4, we messed up, and I kind of talked about it last week, how we messed up because we over leveraged the inauguration gap up when we were playing the downside. It was just a mess. These were a mess. If I leverage my trades better, because as we could see, we had more greens than reds. On the month, I think my day win percent was 66%. So that means that 66% of the time I had a green day. That is really good as a trader. Really, really good. and my trade 1% was 60%. So that means that more than half of the time my trades were great. So the only thing is I had to manage my risk management, and that's okay. This is why we do the progress tracker. This is why we do all of this, so we can get better. So obviously for February, I'm going to try to limit my losses, because that's what happened. I had to limit my losses. I could have sold on these names way earlier and cut my losses, because even on this day, even though we had a news driven event that got us down $800, guys, that's a news event. I can't hold that. There's nothing I could do about that. So even if we were to erase this, we would have had a great month. If we didn't have a minus 700 day, we would have had a positive month. So add 700 to the monthly stat. So the monthly stat, I think we're down $200. So add 700 to that. How much will be up? So we'll be up about 500 for the month. So honestly, we would have been up almost $1,000 for the week. This is a successful week in my opinion. I mean, yeah, we went green, so of course it's successful, but I mean more successful than a 400 win. So why do I say all this, guys? Tracking your wins and your losses is super important, because it helps you replicate trades. And as long as I keep up the good work and just, manage my risk better, guys, we're going to look really good this year. Really, really good. Especially because this month was the most choppiest month I've seen in a while. Whoo, if we can trade this bullshit of a market, imagine the year when things start to actually stabilize and price action stays steady. Oh my God. Anyways, let's move on. So let's talk about the weekly macroeconomic report. We got the dollar and the US yields. We broke down out of our upwards trend. So it looks like we're changing trend on the dollar. Maybe. So if we dial in on the daily chart, it looks like we're actually breaking out of this upwards trend. So if we end up breaking out of this upwards trend, it looks like we're trying to test this area of supply resistance in 109, from between 109 to 109.2. So if we fail this 109.2, I do think that we could continue going lower and breaking down underneath this 106, 107 area. So that can happen. However, another scenario that actually can happen is if we actually break back up into our upwards channel. If we break back up into our upwards channel, this would be super bearish for the markets. I would think that we continue going lower into the markets. However, if we end up rejecting this area, I do think the markets can definitely rally for sure, because the dollar does bring pressure into equities. So again, if we come into resistance and we end up selling down, I do think that we can definitely see some major breakdowns. Not breakdowns, breakouts in the market. So that's what I'm watching for. So does the US yield support this thesis that we're going to break down? Absolutely not. The US yields, in my opinion, is super scary because you haven't broken down out of this weekly chart. So I want to see if we break down out this weekly chart and we end up continue going down, right? Because if you use this as support and this ends up becoming our bottom, then I could see us continue going higher. And if we curl up and go higher here, I do think that it's spooky for the market, and we can actually be seeing some type of top being put into the market, at least on the short term. And if a top's being put on the market, which is honestly, I think I'm starting to lean on it. Maybe if a top's being put on the market, then I do think that we can definitely see pressures in the economy. So I do think that this week we should really be paying attention to our US yields and our dollar. So let's try to see what's going to happen. I don't know what's going to happen, but obviously we already broke down out of our upwards trend on the dollar. So I'm waiting to see if we break down on the US yields as well. Again, if we don't, I don't know. Anyways, let's move on to our futures. When we look at our futures report, the NASDAQ, let's look from the top down level. So basically on Friday, we closed the monthly candle and we closed the weekly candle. Super important because we want to look top down when we make our analysis, mainly because it kind of tells you where you're going. You need a roadmap from the top down, because on the shorter time frames, you might be looking bearish, but you could be looking super duper bullish on the higher time frames. So what does this look like? For me, this can be anything on the NASDAQ. You've been consolidating for 6 whole months on the NASDAQ in this range. 6 whole months. Even though you've been consolidating for 6 whole months, if you look at the price action, and you could kind of see it on the line chart, you're just going up. You're just going up. You're literally just going up. Even on this monthly close, let me go ahead and take out all of this drawing. Even if you look on a line chart, you're pointing higher. You're literally pointing higher. So am I really bearish? Should I be really bearish? I don't think so. I don't think we should be very bearish at this stage. As a matter of fact, for us to be bearish, we would have to have closed underneath our low here. So if we close underneath 21 2, if we were to have closed underneath 21,225, 200, if we were to have closed underneath 21,235, I would have been a little bit more bearish, especially even if we closed underneath 21,000. I would have been super bearish. But we end up maintaining our close, our open of last month, and I'm straight with that. I would have even been more I would have been even more bullish if we closed at our November high at 21,636. I would have been even more bearish. I mean, more bullish, but it didn't happen. So I'm kind of more neutral to bullish, like mainly cautiously bullish on a monthly chart. But I mean, you didn't make a higher high, but you did make a lower low. So maybe we could instigate more selling pressure. But if I'm being completely honest, let's not look at the weekly yet. If I'm being completely honest, even if we sell down all the way to 20,121, even if we sell all the way down here, we're still holding this monthly consolidation. And what type of monthly consolidation is this? This is technically an ascending triangle formation where we're flat topping here and we're making higher lows until we actually break out. So we actually broke out, and now we're testing the breakout. So us testing this breakout here is, it makes sense. I mean, all we did was just test the breakout. I can argue that we're just testing this breakout. So us testing this breakout is pretty damn bullish in my opinion. So as long as we hold above 2,530, I'm so sorry, I hate reading numbers. If we can hold above 25,26, so 20,526, I do think we're good. I can't say we're bearish at all, like even on the monthly. So even if we go down to our weekly, it's super apparent to see we're forming some type of inverse head and shoulders. It's super hard to see on the candle bar to bar count, but let's look on the weekly, the line chart. Guys, you have our head, you have our shoulder, and our shoulder. We're forming some type of inverse head and shoulders, and I like this. So if we end up breaking out, I would not be surprised. We have our resistances that was over here around around 21.5. So if we hold above this 21.530, 21.520, if we hold above this will be super bullish, and this would actually validate our inverse head and shoulder look that we're watching right here. So again, I'm kind of bullish still, cautiously. I'm cautiously bullish. So even on the weekly chart, you still look pretty decent. And obviously, it just pretty much guidance at this point. As long as so even if we start out the week with a sell down and we sell down to this area here, 21,350, I would just buy here. I wouldn't even be too bearish. Like at this stage, it just looks like buyers are actually stepping in and sellers are getting clapped, in my opinion. Because sellers, they keep getting bought up, and I can't really be too, bearish. I want to see if sellers can break you underneath and hold you under this area. Because if sellers can break you down and hold you underneath 21,291, then I can lean a little bit more towards the bearish side. Like I could lean a little bit more towards it. But if they fail, like even if they come down and they test it, but they fail, end up failing, and you close above this area, then at that point, I would have to assume that we're gonna at least test our supply zone. So where's our supply zone? If we look at our daily, it's where that gap fill area. Our supply zone lies around this area where we actually rejected on our Friday session. So again, if I were to look at this area, let me go ahead and erase this. If I were to look at this area to be where buyers end up buying us back or at least holding us above, then I want to see this retest. I want to see this retest of this zone here. And if we end up breaking above, then I personally believe that we're going to test all-time highs if we break up above. But if we end up even testing this area and failing, then I do think we can even see potentially 2694 and even potentially 20,121. But obviously, we're just going to see how the environment operates, how the market operates. So with that being said, I'm still pretty much bullish on the NASDAQ until proven otherwise. So yeah. But if we actually break out and we mount this 21.7 area, so if we mount this area here at 21.7, then I'm bullish. If we mount this area, as long as we mount this area, we are super bullish on the markets and we should go to all-time highs. So that's what we should be watching. Next, when we go to ES, ES is pretty interesting because, the ES is pretty interesting because even though everyone's super bullish on the SPY compared to the NASDAQ, I do think the NASDAQ presents more opportunity than the SPY, mainly because if we zoom in on the SPY doesn't have that clean of a look, right? It does, but kind of doesn't. It looks like you really want to retest this lower zone, while the NASDAQ kind of looks like, you're ready to break out a little bit. And the reason why is because I want to go more on the weekly because you can kind of see it better on a weekly. On a weekly, our main battle zone is the 6,000 area. So it looks like we're trying to retest that 6,000 area again. Now, obviously, this 66.5 area is a very good area of like buys. Like obviously, buyers are really trying to hold you here. But with us hitting the supply zone on a Friday session, I do think that if we continue selling, we're going to try to retest the 6,000 area. Even the 60.30, that's another area of buys. So if we can hit this area and hold, then of course I'm super bullish. Then I'll be really, really bullish, and I think we can continue going higher. But how the chart is looking, it's not as clean as the NASDAQ in my opinion. I think it's kind of looking like we want to go even lower and try to test this 59.38 and potentially this 58.80, this 58.66 area. But I guess we wouldn't know unless we try. Until we have to see what happens. Sorry, my alert just went off. Ethereum just hit one of the crucial levels that I've been watching. Looks like a buy zone for me. Anyways, yeah, I like this a lot. I like this a lot, but I did need confirmation on the SPY. So again, 6,000 is your area to watch this week. We got to see if that holds. If we hold, if sellers break you underneath 6,000, we gotta look. We gotta look for that 59.38 area. But if sellers fail to bring you underneath, then I do think we can look for buying opportunities between 6,000 and confirmation is above 60.30. So anywhere in this area, we can look for buyers. So yeah, that's what I'm watching for the ES. Now let's go into the small caps, the Russell and the Dow Jones. So I already kind of went over this, so that's why I have the check mark. Basically, long story short, I do think that the Russell and the Dow Jones are pluses. I do think that these are bullish markets. And with these being bullish, I don't see why we should be as bearish in the markets as everyone is making it seem. And mainly because, again, you're consolidating in the zone, and I love this, right? You're consolidating in the zone here on the RTY, Anytime you get into this buy zone, it's always been proved to be a very good buy. Right now, you're looking to do some type of oscillating breakout here, where we keep on making a series of lower highs and we keep on making a series of higher lows and higher highs. So it looks like we're trying to target this high here because we're curling off of this support. And I love it. As long as we stay above 2240, as long as we can stay above this area here, I think we're super bullish, easily, super duper bullish, especially on RTY. So I do think small caps, that's your name. So this is where you should be watching. And this kind of supports my thesis. Earlier in the video, I was saying like Uber looks really good. But I'll save that for the individual names portion of the video. So I do like RTY a lot. Dow Jones. Again, I like it a lot. I've been harping on Dow Jones ever since the year started. My dog barking in the background. Please ignore her. But yeah, we're only doing one take because yeah, what happened earlier, the video not working. Yeah, that kind of messed me up. So boom, right? I like the Dow Jones here a lot. If we get some type of retest here at 43,800, I think we can definitely see some action like this and continue higher. If not, we do have another buy zone here at 42,800. So I'm a super buyer here, and I'm also a buyer here. So we got to see what actually happens. Do we actually get a bounce, or do we actually continue going lower? If we continue going lower, this is just a second opportunity for us to buy, and I would love to be a buyer there. So that's what I'm watching out of the Dow Jones and out of the Russell. Next, let's go into the tech charts. Now, as we go into the tech chart, you're probably wondering like, whoa, this looks a little bit different, right? Whoops. This looks a little bit different. What the heck is going on? So it looks a little bit different because I want to show you guys something super interesting that I found, right? So obviously this thing right here, this ticker. So obviously this chart right here is a compilation of all the big tech names, and I call it the big tech chart. So you got Tesla, Netflix, Apple, Amazon, Nvidia, Microsoft, Google, and Meta. So these are a compilation of all the big tech names of the biggest cap in the space, the market, especially in the tech names. And I put them all together so I could see how big tech is doing compared to the whole tech space. Okay. So these are the biggest blocks of technology. So obviously that's why it's there. So as we analyze just this chart, I hope you guys can see it pretty well. If you can't, I'm sorry, but yeah, as you can see, we are looking like we are potentially double topping. So as we're potentially double topping, we can confirm a double top if we actually test this neckline and break down. A break of this neckline, which is at 29. Well, at 3,000, if we break underneath 3,000, then we have a support zone at 2,900 and another one at 2,800. So that's a pretty substantial move. And should we be bullish in tech space? And the answer to that, maybe. Because the reason why I say that is because there are major divergences that I'm finding. If you guys notice, because this kind of segues into the XOK. If you guys notice, for the past weeks, I've been super duper bullish on the XOK, and as I should be. But why would I be bullish on the XOK when you potentially look like you're double topping on the Nasdaq? Not the Nasdaq, on the big tech chart. Shouldn't we be bearish on the QQQ and on the XOK? Maybe. I don't know. And the reason why I say maybe I don't know is because there's no answer as of right now. As of right now, I think that there's major divergences that we have to start talking about. As we zoom in within this zone here, again, this is the compilation chart and this is the individual ticker. So here's your Tesla, your Nvidia, your Netflix, your Apple, your Microsoft, your Amazon, your Google, your Meta. Okay. So as we look at this, we can see that the compilation of big tech has been going lower, right? It's been going lower, not going lower, going lower, going lower, going lower, going lower, not really going lower, not really going lower. And you can see that there's divergences here, stuff going on in the background, because as we're going higher here, we should be going higher because look, the big tech chart is going higher. Not not really going higher. Not really going high. Going low. This is going sideways. This is going lower. This is kind of going higher. This is kind of going lower, going higher, down higher. So as we can see that there's divergences going on here. So you have divergences going on Microsoft, on Apple, and Nvidia. Boom. So where am I getting at? Why do we care about these divergences, right? So this is why we should be worrying about this. Let's go back to our last major high. Our last major high is over here. Let's mark it right here. This is our last major high. Boop. And this is our present. This is where we are right now. This is where we are. This is where we're at. Boop. Okay. As we've been stretching out for 7 whole months, 6, 7, 8 whole months, we've been stretching out. As we've been throughout going out this time frame, we've been going higher, right? So you would expect the tech names to be going higher. Tesla going higher. Netflix going higher. Apple not really going higher. Microsoft not really going higher, going lower actually. Amazon higher. Google higher. Meta higher. All of these names are going higher, 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 higher. The only ones not going higher, Nvidia, Apple, Microsoft. These aren't going higher. These are just either going sideways or down. So why does that matter? It's because you've broken out all the way up here on these charts. So that should be reflective of the actual price of the individual ticker. Let's look at Nvidia, for example. Nvidia has actually been leading the charge of this whole breakout. Leading the charge. Even when the market itself, like the big tech market, has been going down in this instant, Nvidia was still just going sideways to up. Sideways to up. It's just been going, even this major breakdown here, it's still really just going up. So you've just been going higher. Tesla just been going lower. You got Netflix. Netflix has been going higher in that time span. Apple just going sideways. Microsoft going higher. Everything else is going higher. But as you look at, especially in the video, really just been leading this wave, this charge, just been going higher. What about now? Why isn't the video, while the whole market is going higher, you see the whole market is going higher. Everything's just going higher and higher. Everything's just going higher and higher. Why isn't the video not going higher? You just been going flat to down. Just flat to down. Same thing with Apple. You just been going flat to down. Microsoft, you honestly just been going down. Just major divergences as the market's going up. So you have sectors that just been holding you up in the big tech space, while the biggest stocks in the world. Now, newsflash, if you didn't know, let's erase everything, right? Just a newsflash for everybody, right? The biggest stocks in the world right now are Nvidia, Apple, and Microsoft. Okay, what are the biggest holdings of the XLK? Again, the XLK is a SPY ETF, the subsidiary of a SPY. You have the 3 biggest names holdings in the XLK: Nvidia, Apple, Microsoft. So you're telling me, right? This is what has me kind of just rubbing my chin a little bit. So you're telling me that you're making these multi-month divergences on these 3 names on the XLK while everything's going higher and higher. So what would happen? This is the question I'm going to ask you guys. What would happen if the broad market sells off? What would happen if it sells off? If it sells off, I can see these names going lower, these names going lower, these names going lower, these names going lower, these names going lower. and these catching a bounce. I could see that happening. I'm not saying it's gonna happen. I could see it because you see the divergences. So is it possible for the QQQ to go lower while people are buying your biggest tech names? It's possible. In my opinion, I think it's possible. Now, the reason why I bring this idea up is because here on the XOK, let's look at it. You've been holding since July this range. You've been holding this range. I've been talking about a potential multi-month breakout, but instead you've just been consolidating in this support demand zone here. That is bullish. Last month, you had major economic and tech news that could have brought you down all the way down here. Did you? No. Instead, you've held on the monthly chart your demand zone. I've told you guys you can go bullish on the XOK, even if you test this 223 to 228. As long as you hold this demand zone, you're super bullish. Look at this ascending triangle formation where you're making a series of higher lows, and a series of higher highs. Well, technically a flat top, but this flat top had a breakout on November. So you had a breakout and you're potentially retesting your breakout. Oh my goodness. Is this not bullish to y'all? You had a breakout, now you're retesting the breakout and you're holding the breakout level? That's bearish? Raggy? This is bearish? No. This presents a crazy buying opportunity, in my humble opinion. I think the XLK is super duper bullish, right? The top 3 names of the XLK: NVIDIA, Microsoft, Apple. NVIDIA, Apple, Microsoft. Oh my goodness. I personally think that if we were to find a bounce in the market, those are the names to be watching. In my humble opinion, those are the names you should be watching. Even Microsoft selling down on their earnings because of soft guidance, they could have went down to all the way to 385. They only went down to like 416 and found buyers toward the end of the week. 416 was your. We can go. Let's go to it. I'll go to it just to show you. Let's go to it right now. 416 right here was supposed to be 416, 413. This is where you expect to find buyers. This is where I found, like, I have my levels marked out. This is where you were supposed to find buyers. In my humble opinion, this just looks like you're making a series of higher lows. You just keep making a series of higher lows. It looks like you're curling. I just don't see bearishness here. It looks like you really want to retest highs. Like, I'm just not bearish. I don't see it. Like, I'm trying to be bearish, but I can't really be bearish on tech. So even if we look at the QQQ, same thing with the NASDAQ, you look decent. Even if you end up selling down, as long as you hold here are the levels. Let me just tell you the levels, because it's super apparent. I have it written down here. Let me pull it out. Boom. Okay. So at this stage, what I have here, even if let's say we hold this area, let's say we hold between 522 and 524, that's super bullish. We got to hold above this area to potentially retest the supply zone. So the supply zone sits between 535 and 531. So let's just mark it out. So somewhere in between here. So here's your supply zone. Boom. So if we somehow hold this area, I do think that we can break out easily. However, let's say we can't hold this area. Let's say we just can't hold this area. Then we have different buy zones. We have a buy zone here at 518. So right here. We have a buy zone here. Or we have a buy zone right here at 510. This is you have a gap. Your gap already kind of filled, but I think you have a little bit more room. So between 510 and 508, this is another major buy zone. So I know my drawings are ugly, but I don't feel like taking out the other tools. So boom. So again, I do like your buy zones between 518, 510, 508. he looked pretty good in my opinion. Obviously, even if I show you on a line chart, let's look at a line chart. Same thing with a NASDAQ. You are potentially making some type of inverse head and shoulders. So again, even if you come down all the way to 518, you look decent. You look decent. And again, you still have major resistances that turn supply right here at 514. So again, if you can't hold this area right here at 517, 518, you do have 514, 513. So I'm still bullish. I'm not gonna lie to you. But bears, I do think bears don't have it at this moment. I think they can. I would be watching toward the back end of February. Maybe we get like a major sell. Who knows? But right now, guys, I don't think we should be that. I don't think we should be that concerned. Next, let's go over chips. I'm gonna go over just a little bit fundamental analysis of like the DeepSeek stuff, and then we're gonna go back into the technicals. Long story short, I think it's an overreaction. DeepSeek was a super overreaction. I'm not gonna say the company who did the the DeepSeek, who created it, but let's talk about it, right? I'm an engineer, guys. I'm an actual engineer. I got my undergrad degree in computer engineering, and I'm getting my master's in AI and machine learning. So I have a lot of research in this field, and I'm only growing as an engineer. So I just want to tell you guys, what do engineers do? Engineers essentially build things. Cool. Yeah, we know that. But we also make things efficient. That's our jobs, to make things efficient. With that company making that R1 model a little bit more efficient than our, different types of models. We have the Claude model. We have Llama. Sorry, guys. That is my alert. I apologize. I hit some targets. So obviously we have our Claude models, our Llama models, even our GPT models. So with R2 coming out, or R1, whatever the frick is called, with that coming out, is that bearish for chips? Long story short, no, it's not. Because obviously, yes, they made a large language model a little bit more efficient than we would have thought they would have done, right? Cool. That's awesome. That's amazing. Oh my goodness. Let me turn off my volume. Cool. So we know this. That's awesome. That's amazing. But that's our job. That's what we're supposed to do. The large language models is not AI. That's only one facet of AI. AI is a whole umbrella of different, problems, of different processes, of different large language models, just one little subsection. So they made large language models efficient in one area of a whole umbrella, and you think that's like going to be the end of semiconductors? That's blasphemy. First and foremost, when we create something, after we create something, we try to make it more efficient. So obviously that's something in the work that they would have to, be working on. These companies that have these, large language models, they have to make it more efficient. That's the job of AI. Because not AI, that's the job of engineering. Anytime you create some type of algorithm, you have to analyze that algorithm and see where we can make it more efficient. That's just what we do as engineers. Because when we make things more efficient in one area, then we can focus on other areas. So us making large language models more efficient in one area, that makes us focus on other areas of the market that we need to focus on, basically. So where am I getting at? Where am I getting at is that this was a very, 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 very overreaction in the markets. Because when you have different facets of AI, even when we start talking about robotics and stuff, there's so much different types of AI that touches robotics. So I just think it's blasphemy, because you even got computer vision, you have, big data, you have, especially big data, you have different type of predictive analysis that you will need large data sets, regardless of you making it more efficient or not. It's, again, different facets of the whole umbrella of AI and how we train agents to learn. Okay? So obviously there's different types of training, reinforcement learning, just different types of ways we do it. And I'm not going to get into that much, but I do think that chips, this was just a easy buy for me, honestly. So I ended up buying I end up buying Nvidia on swings, and honestly, I'm gonna start buying shares on these chip names because we are sitting in this zone here, and as we sit in the zone, these are usually major buy zones. So this is where I'd be major buy. As long as we stay above 240 on SMH, I think we're bullish. As long as we stay above what is this right here, 243 on XSD, I think we're bullish. And I think if we stay above 213, 215 on the stocks, I do think we are bullish as well. So I'm not getting that bearish on the chips market. It looks like you're trying to make it head and shoulders, but it's failing. When you fail at head and shoulders, this usually comes out to be super, super bullish. So I'm still bullish on chips. I don't know about you guys, but me, I am. But that's all I'm gonna really say. Okay, I like it. If you break above 260, I do think we have room to 270 and all-time highs. Same thing on the stocks. If you break above 230 and hold, I do like the 255 push. And for XSD, as long as you stay above 251 here, if you get above and hold 251, I do think you have room all the way to like 280. So I like it a lot. All right, so all this alerts going off. Let's look at it. Look at it. It's even hitting the level in after hours. I'm not really worried about it. It already gapped down. I'm not even. This is just buying opportunities. I'm not gonna lie. Even in the overnight session, it's still looking like some buying opportunities is about to happen. You're already looking like you're getting some buy zones in the areas I just said. So come on, guys. It's not. Come on. Come on. Anyways, I want to go over some of the sectors, the sector watch. Obviously, this is one of my favorite parts of the show now. So let's go over some sectors. I kind of already went over it obviously I already made this video. So, okay, I'm going to briefly go over it. I'm watching right here on energy to come down to at least $85. This is where I see buyers stepping in around $85, $86. So I'm not too bearish on energy. Next, XLV. I'm getting super bullish on the XLV. Oh my goodness. You look really, really good. You look like you're about to make a multi-year breakout. So what I have drawn here, as you can see, I'm not going to erase it so you can see. You are forming some type of inverse head and shoulders here on the weekly. And again, every time we got into the zone, it proved to be major buy zones. The last major one we had was in 2020. 2020 proved to be an amazing year for it. You ran all the way up until 2022. And just to be clear, you've been consolidating in this channel. You've been consolidating sideways for 4 years now, 4 or 5 years now. So you have a 4 or 5 year breakout coming out of this channel. So as long as you break out above, as long as you hold above 147. So if we get back above 147, we hold. I do think we're gonna go crazy here. Or if we come back down and pull back to 140, I do think this is a major buy opportunity for everyone, and I would be a super buy here. We have ranges all the way. We have ranges all the way up to 170, 190, especially if it's a multi-year breakout. Like, we have ranges up here. So I like this a lot. The next sector I like a lot is going to be the XLP. Here, you look like you are potentially coming into this resistance zone. If we end up breaking above $80, I do think $81 to $82, this is where we're going to find some sellers. And if we do find sellers, we can actually retest lows down here at 75 and potentially at 73. So that's what I'll be watching for on the XLP. We made a lot of money last week. So yeah, congratulations to us. XLI. The XLI sector, I like this a lot too. If we hold above 137, I do think we can make some type of lower high right here and continue grinding higher. If not, we could even retest this area, maybe fill this gap right here at $34 and continue grinding higher. I like the XLI a lot. Industrials, still like it. So next, I want to go over individual names. And I know this video is stretching out pretty long, but just bear with me. So as I just went over the XLV, I do think the healthcare sector is one of the best sectors to be watching in the market. I like the UNH. I think that if we look back, again, you have let me take out the drawing tool. You have a multi-year way of going sideways. You've been going sideways about 3 to 4 years. You finally broke out. You came back down. You're testing the breakout. If we actually break above 560 and we hold above 560, I do believe that we're going to the moon. I do believe that we can, because it's a multi-year breakout. Think about it like this, right? If we've been consolidating for multi-years, I do think that even if you think about it like this, like, okay, we couldn't be going up for multi-years, which we've done before. Like, we literally done that before. We went up for multi-years. If we go up for multi-years again, then our target could even be up to 900. So let's say that we have a 3-year breakout. 3-year breakout would be in 2028. So we have range. We have a range up until 870 to almost 1,000. So we have essentially a $500 move, maybe, on the UNH. So I like it a lot. I do think buying shares is super smart in this name. Even if you don't want to buy shares, I do think, swing trading this name is going to be pretty good. It's going to yield some really good returns. Next, we have Uber. Let me just show you on a large scale. Uber. I already told you guys small cap names look really, really good. Small cap names look really, really good. And Uber, oh my goodness. You're operating in a major multi-year. This is from 2023. A multi-year bull flag, consolidation, accumulation, and you have earnings this week. So earnings, I do think if we break out of this bull flag, let's look at where this breakout can extend to. So here's your flag and here's your pole. If we measure out the pole, we have a range all the way to 145 potentially. So I do like Uber a lot, like, let's see. Yeah, 145, 156, maybe 128. I do like it a lot. I do think Uber is, if it does break out this week, I have a lot of shares in Uber, and I will be playing earnings for sure. Last but not least, I like NVIDIA. NVIDIA here, you did break down out of this upwards trend line. However, if I were to be real, you did break out of this upwards trend line right here, and you went right back into our channel. Usually ranges like to rotate. So if our range actually rotates again, then I do think that a break underneath our trend line is actually warranted for a false breakdown. And we can actually retest our all-time highs and eventually get all the way to like 190. So that's what I'm watching for on a multi-month breakout. Again, you've been consolidating in this range here for 7 months, like 6-7 months. You've been consolidating in this range, maybe even 8 months. I don't know. I'm not counting it, but you've been consolidating 6 to 8 months of consolidation. So I do think that if we do break out, we have earnings this month. If we do break out, oh yeah, I like NVIDIA a lot, like a lot. But anyways, that's all I got for you guys. If you guys enjoyed the video, make sure you leave a like, comment, subscribe if you're new. This has been your boy Go to Trades, and remember, we have a Discord. Our Discord link is down below in the description. Check it out. Super free, free 99. Anyways, with that being said, make sure you stay green for the week. Make sure you have a profitable week. I hope you have a great day. Anyways, I'm gone. Peace.